Learn Price Behavior Master Market Advantage. Hello everyone, this is Bella. Welcome to my series of teaching and sharing videos on information of price behavior. Today we're going to look at the main trend reversal pattern known as the double top and bottom pattern. Before I talk about inversion form, let me mention a couple of important things that I'll mention every time I talk about inversion form, and this is where a lot of people fall down. Market movements have a tendency to maintain their current state of motion. No matter how perfect a reversal pattern is in a well-defined trend, it has a low win rate. In most cases, it creates a range rather than a trend reversal. 2. In most cases, I only enter the broad trend direction at the end of a trend pullback based on the reversal pattern, or use the reversal pattern as a validation of support resistance at important support resistance levels. Third, the logic of the reverse form is actually very simple, but it will be difficult to master in the actual transaction to apply. Do reverse a lot of times need to rely on experience for subjective judgment. A lot of people, including myself, in just learned to reverse form after the rush to trade to practice have suffered a lot. Let's now recall some of the major trend reversal steps from the previous video. We said there are 3 things, but I forgot to mention that first of all, the first thing is that the current market has to be a trend, because if there is no trend, there is no reversal. Second, a strong contrarian movement above important trend lines and averages is a testament to the power of the contrarian side, which is trying to gain control of the market. Third, test the original trend in time and then start the second contrarian movement. This time it can be higher or lower or parallel. The point is that we want to see the contrarian gain control in this test. Fourth and most important, the second contrarian movement must go far enough to bring about a contrarian break, with the volatility so large that the market comes to a consensus that the trend has reversed. If the second contrarian movement does not bring about a strong contrarian break, it is likely to usher in a range of shocks rather than a trend reversal, which is a common step of major trend reversals. And we've talked about that in the last video, and now let's go a little bit deeper into the logic behind that. The reversal of the trend requires the exhaustion of the precessional forces and the strong participation of the counter-trend forces. We need to learn how to understand the changes of these major forces from the K-line chart. Here, we take a case of Aussie dollar to explain. And we can see that there is a bullish trend brought by the reversal of the high tide. So the high tide reversal, and it happened in March 2020 during the global financial panic caused by the pandemic. A lot of commodity markets had this kind of avalanche and high tide reversal, and most of you have the impression that we focus on the bullish trend behind it. Every time a bull trend breaks out of the previous trend, there are 3 phenomena: more buying, profit liquidation, and reverse shorting, which correspond to the 3 phases of the trend from strength to weakness and then. Again, we also talked about in the interval breakthrough piece that in the process of breakthrough, we don't know what kind of state it is until we see the subsequent corresponding price behavior. We can make the corresponding operation. So the reverse form is very clear, but in practice it is not the case at all. Let's talk about the movement logic of the market for a moment without looking at the details of the price behavior out of the signal. The first 2 blue line marked by the horizontal, here to the previous trend of the extreme value of the breakthrough has brought more momentum into the market. There are long positions, and the sidelines of the money to buy this is a healthy trend movement performance. When we look at the last timely break against the previous trend, the price has not run very far back below the level. When this happens, we should know that the break is not generating more buying power, and the main bulls are taking advantage of this break to close out their positions. It is important to note here that just because the main bulls close out their positions on the breakout does not mean that they are no longer bullish. They're just willing to rebuy at a lower level, and that's a sign of weakening trend momentum. We know that weakening trend momentum is not enough to bring about a reversal. The trend side will try to recover at every opportunity. It would take a strong break in the counter-trend force for the major bulls in the market to change their views. When this breakout failure occurred, he had already done 2 steps, that is, he had a big break of the main trend line below the moving average and a test of the previous trend extreme, which also showed the weakness of the bulls. It needed a contrarian break before we could say that the main trend reversal pattern was established. We can clearly see from the chart that prices are again supported at the pre-band lows. This is what we just talked about when bulls close out on a breakout and are only willing to re-enter at lower prices. We can't tell that the trend has reversed when the market moves here. Bulls here to reinforce if the follow-up to the trend of the breakthrough then formed a double bottom bull flag trend continuation. The main participants in the field at this time are watching the subsequent upward trend to judge the strength of the bearish forces. We focus on this break. Some people think it is an attempt to break head to shoulder, top left shoulder. Can be understood so, but there is another point to note that it is also a common sense of the previous down band trend formed by a break in the former band high. I'm going to highlight this front band high. It's what's forming a front band high in this down move, and then I'm going to delete it because it's going to look like a mess, and the price is trying to break out of these two key positions at the same time, either because the bulls are weak or because the bears are strong, and it doesn't matter why. The point is that when this breakout failure pattern comes out, all participants in the market know that the bulls have lost control of the market. When this signal comes out, it will lead to more profit-taking by bulls who have rebuilt positions near the previous lows, as well as long bulls who have bought on the previous highs. Long-term institutional players will continue to come in for any reason until the trend force is significantly diminished, and the dominant short force will seize the opportunity to actively participate in the fight for market dominance. Here is the second false break in trend direction. So can we conclude that the bull trend has reversed to the bear trend? Of course not. It just means that the trend is weakening again. We can't assume that the bears are in control of the market until a contrarian breakout occurs. Let's assume that the breakout is successful and triggers a new bullish trend movement. It makes logical sense that what we thought was a potential reversal pattern failed the previous two band lows, and it formed a double bottom bull flag, a trend retracement pattern. And finally the short breakout, the contrarian breakout, finally happened, and we can see that this breakout was not quite straightforward because it was a sharp move to the bottom of the range. We often talk about this kind of rapid interval movement that tends to deplete momentum, so this breakout happened when the bulls and bears had been playing with each other for a while. The final break against the trend declared success, the current day level of the bull trend clear reversal, more bull main to realize this point, to close out more bear main, and on the sidelines of the funds, to see the strong entry to push the price down. The day level of the bull trend reversal on the weekly line or the monthly line will be a correction movement. I'm not going to do that on a case-by-case basis in this video. These are the thoughts and actions of the major players in the market and the corresponding actions on the K-line chart during the trend reversal process. So how do we trade the major trend reversal pattern? According to what kind of signal? K-line admission? I don't do major trend reversals in my own trading system, as I mentioned at the beginning of this video, and as I mentioned in the previous videos in my series of major trading patterns, that I don't have the kind of reversal patterns that we talked about today. However, when I was designing my trading system at the early stage of trading, I tried many trading patterns and had some research on major trend reversal patterns, but I deleted this trading pattern when the system was finally formed because it did not suit me. Trading trend reversals must sacrifice the win ratio for the break-even ratio, and I personally only like to trade with a high win ratio, so I can briefly share the main trend reversals, how to trade, and what the problems are with the trade. So you can make your own choices if you choose this type of trade. Let's start with the example in the diagram. Where is our best entry point for this major trend reversal? In our hindsight, it's very simple, it's very clear. At the head and the right shoulder of the head and shoulder pattern, the price has fallen very far after these two reversals, but would it be as simple on a real scale? Let's get rid of the K line at the back and see what happens when the price moves to the top of this head and shoulder. Step 1, a strong contrarian movement that breaks the main trend line and the moving average, so here we have it. Step 2, a back test of the previous trend extreme, and here a back test of a higher peak is barely acceptable, and then the signal K line is a wall of negative, but right now you see this signal that the K line closes, and you can tell that 70 or 80 K lines later the contrarian break has taken place and the bull trend has been reversed? I don't see it. Even though we're looking at it from a recovery point of view, this is the best entry point, but a trend reversal is a step-by-step price run here, and we have no way of knowing that there's going to be a final contrarian breakout, and it's a question of whether or not we can short this K line, because the price has already broken out of the previous high by some distance. It's hard to say that this breakout is a failure of the price. It pulls back the breakout point, it does a breakout pullback, it does a trackers, and then it goes up, and there's no problem with that. So we find that this is the best reversal in price, but in fact we may not be able to get in at all. Now, if you look at this, what we call the right shoulder at the top of the head and shoulders here, the short signal here is actually pretty good, but this short single logic to me is more of a false break of the interval than it is to do this inversion pattern. This new number K line is also very good. Focus on the opening of this K line. It is a jump, gap is not small. The cause of the formation of short price is generally the release of market sentiment or in the modification of some news impact. And then there's the other thing that happens when you have a short market that's not deep enough, but it doesn't make any sense. There's a short open that in itself is good for the rally, but it makes a false break to the upside and it closes at a low. A positive signal is rejected by the market is a good entry signal for the contrarian side, and you can't master that signal, and it doesn't matter if you use the ones we always talk about: single K line reversal, double K line reversal, second breakout. But the caveat here, as I mentioned in the last video, is that if you want to do a reverse shift instead of a trading range, you have to enter with a strong signal K line. What is a strong signal K line? I talked about it in the previous K-line pattern video, and I'm not going to mention it here. But is it your subjective belief that the market is going to reverse, but does the price go here and confirm that the trend has reversed? Of course, there are no 3-step strong contrarian movement with forward drive and timely back test so we have this entry point right here, head and shoulders. The head is a retest of the higher point of the previous trend mechanism, and then it breaks through, and there's a deep drop. So what is our right shoulder? That's a second entry for the head. Okay. So if the market goes to the top of the head and shoulders, and this is our right shoulder, is a second entry, and if the market doesn't give you a second entry, this double top, it just goes against the trend, right? Then it's a double top, and there's no second entry, and that's it. The last contrarian's break still hasn't happened, and since there hasn't been a contrarian's break, we can't say that the trend has reversed and you're short on your right shoulder. It's all about order management. Stop loss first. Where do you put your stops when you get in? Most of my trades come in, and I put my stop loss on the other end of the signal K line. So let's say the signal K line breaks, and we go short, and then I put my stop loss on the credit component, and that's what it looks like. But it's not so good to do that in this pattern where you subjectively think that the trend is going to reverse. That is the potential reversal pattern. Stop the loss with the signal K line, and there's a really amazing profit/loss ratio. And let's see if it goes against the trend and breaks out to your final target of the reversal pattern. How do you measure the final target of the reversal pattern? So this is the same thing you learned, which is equal times the distance of an interval, and this is the height of the interval. So here's the height of this head and shoulder top pattern. It's 470 points, close to 500, and you translate that height straight down, and that's the ultimate target level for a reversal pattern, but the price doesn't necessarily give you that far, and that's ideal. So let's see, if you take the signal K line as an entry and stop loss, what's your profit/loss ratio? If you break your entry price is about here, and your stop loss is 70, 80, let's say 80, then your final profit, assuming this pattern is true, then your profit/loss ratio is close to 10, and you have 9, which is a very high profit/loss ratio. But if you break your entry K line at the price, you have reached our stop loss. Did the market reject your logic for doing the reversal? Of course not, because you think this is a potential reversal pattern, and the right shoulder position is the second entry given by the head, and as long as the price doesn't break the head is the former high, your logic of saying this is a potential reversal pattern doesn't fail. So your stop is an invalid stop, and it's only reasonable to place your stop above the former band high. But the profit/loss ratio would be much lower. Some people say, can I just narrow my stop? Sure I can. After all, go in with the range logic. If we do what I do, we're going to narrow our stop. But if you're trading a reversal pattern, you already have a low win rate and you have to narrow your stop loss, you're going to have a lower win rate. So that's a question of making a trading decision. You know, if you think it's right for you, you do it stop loss and then profit target so far you just entered or the next break you enter at the time of the contra breakout has not occurred, then my advice is if you fall to the front band low, you close half of the position, the rest of the position you hold on to wait for a contra breakout to occur, and if the contra breakout occurs you take the final target of the pattern. Well, someone who thinks that the ultimate target is so far out that they're making so much money doesn't have a problem if they don't want to take half of their position in the first place, because if you do that you're probably going to lose this deal and your big float is going to go up in smoke. Again, so far the contrarian breakout hasn't happened, you can't assume that the reversal pattern is in place, and if the contrarian breakout doesn't happen it's going to go into a range, and you've made a trade for nothing. There's another way to enter, and some of your friends might say you said that if the contrarian break didn't happen, the reverse pattern wouldn't be true, so I trade the contrarian break like here, and there's no problem with the entry, and it's pretty good, and you trade the band support, just like the case in this picture, just a break in the horizontal level would do. The specific breakout entry pattern and the setting of the stop loss that I talked about in the interval breakout, and I won't repeat it here, but you can see that it's easier to trade this potential reversal pattern as an interval. One of the movement targets that we see at break is not much different from the level of target that we originally estimated with this form, and there is an entry that experienced reverse traders would use, and I can't do it well myself and I don't recommend it to beginners. But we can learn their entry logic. Reversal trading is a subjective decision based on principle based on logic, which means that if the market conditions have satisfied his criteria for a reversal, he is going to make a subjective decision that the market has reversed and he is going to enter the market and he is going to continue with the case. Let's say that the mayor has come here and we haven't come out yet. What has he done? The break below the main trend line has a test of the front high with a false break to the front high, and that break is still quite large, and this big break has been added back to the front band low. For some, it's already ripe for a reversal. They think the bull is running out of steam because it can get back to a starting point after such a long break. So in subsequent rallies, as soon as the price approaches the former band high, it will simply come in and short the unequal K signal. It's not recommended until you're an experienced trader, or it seems to me that all the order entry, the left entry, is for experienced traders, and I personally use breakout entry in most cases, because breakout entry means that the price is moving in the direction that you want to go. What is the winning rate of this major trend reversal pattern? In general, there's about a 40% chance that you're going to have a big upside, a 30% chance that you're going to have a small loss, a 30% chance that you're going to have a small upside. Most of the moves that you're going to have are going to be swings rather than reversals. Someone at this time may say, "Oh, you are a piece of garbage." Other people who he did reverse the winning rate can be high. Your technology is not good. In fact, the above data is not my statistics, it is directly from the book Albros. If you reverse the trade, you have a very high break-even ratio, and over the long run you do 3 to 1, 4 to 1 on average, and you have that high break-even ratio. How much can you improve your win ratio? That's not quite right. There are some systems that have a high break-even ratio that have a good winning rate, but one of the problems with these systems is that there are very few trading opportunities. There's nothing wrong with you trying to do this system, but I've seen a lot of people trying to do this system in this long wait for the opportunity to trade, and he just gets bored and he goes in there and he blows up and they try to reverse, and most of the reversals fail. It had an example of a failed reversal attempt earlier in our case, and some of you may have noticed that there is a pattern of speed and channel, and there is a channel line drawn on it, but what we're going to focus on is this strong break of the trend line, and we're going to talk about this strong break of the trend line against the EMA. It's the first step of reversal, and then the price tests the front high. And what's the band of this test? In fact, it also went through a pattern of rapid and channel, and there were a lot of schools of technical analysis at the time that said there should be a note here, and I'm not very good at fundamental analysis, but if I remember correctly, at that time around the RBA he also indicated that it was maintaining a low absorption state. In addition, there may be interest rate cuts in the future, so the fundamentals are more conducive to the decline. However, as we all know, the bulls successfully broke through the long trend and continued. At that time, a senior of mine who worked with me for a long time lost $780,000 on the short trade. A loss of $700 or $800 in one trade is a very bad thing for a trader to do. I've seen a lot of traders on the internet who just got tripped up in this run. A strong break in the trend line is just the first step in a reversal. As the force gets weaker, it can lower its slope and keep going up, so this uptrend line has been breached. Can it go up with another trend line with a different slope? That's not a problem, right? It doesn't say that if you break a trend line you have to reverse the underlying pattern of the previous reversal, and that's this strong break of the trend line, and then it becomes a correction pattern of a trend retracement pattern. It makes a double bottom or a triple bottom or a wedge or whatever you want to think about it, and it becomes a pullback pattern. And finally we'll just go through a couple of cases and talk about this major trend reversal pattern, and I'm not like before, it's just a couple of K wires and a couple of K wires, and I'm going to do this because a pattern like this, it's probably going to have close to 100 K wires. Right? If you look at it from the opposite angle, you might only get one or two of the 100 K lines that are worth getting in. And then if you go to 1 K line and 1 K line, you don't waste your time. So let's look at the first case where we have a clear trend, and then we have a strong break against the trend line and a strong break against the EMA, so that's the first step. The second step is to test the extreme of the original trend, so let's look at the rise from this contrarian break and start testing. This test has not been hit at the previous band point, which is the extreme of the previous trend, and that's okay, so the lowering or parallel and higher of this high is okay as we said. So the price at the top of the previous band at this level, what does it appear to have a K-line combination like this? What is it? It's the first big sun line moving fast moving, followed by 3 overlapping long necks of the K-line, and this is what we're talking about is a mini trading band, which is a price break, and then there's a longer upper line, and I've said this a lot of times whether it's a breakout or breakout. So let's look at the follow through, and the arrow marks one of our entry signals, and you're short here, and you think that this bull trend that we had before reversed a potential reversal pattern, and what we find is that it did fall quite a bit, but it didn't cause a breakout against the trend, so we can't say that the trend has reversed without a counter-trend breakthrough. This potential reversal pattern, it doesn't hold. It has a reversal pattern and it turns into a sideways trading band, and then this sideways trading range, and then the direction of the trend is to break out to the bulls, and then the range turns into a pullback pattern, and so we find that in a lot of cases this potential reversal pattern turns into this kind of swing band, and you can go back and look at this more often than not. And what we find here is that if you trade it as a range, you can still make a lot of money, and you're wasting your time trying to reverse it. Now let's look at the next case, where we have two big down moves. Is it a downtrend or not? So everybody has a different opinion on that, and in some systems this magnitude of motion is a trend, but in some systems, if you want to do Vegas, this might not be a trend. But we're not going to talk about that, and we're not going to talk about that, and the down motion in these two segments is still much deeper than the down motion in these two segments, and we can look for the reverse pattern. So we've got a big break of the downtrend line, and then a timely retest of the uptrend, and in the process of the retest it's a little bit confusing. It starts with a false break of the K line, which is the positive line, followed by a continuous overlap of the non-trend K line, which allows the market to enter an undefined trading range. In this case, it's a little bit difficult because if you enter when this signal, the K line, appears, because this signal is a good K line, the K line means that there is only one false break to the ejector in front of you, then you are more likely to be knocked out by the K line of this very long line. But after the appearance of this super long K line, it further proves that the fake break you can do more. So sometimes when trading will encounter this kind of uncomfortable thing is that the fake break hit you stop loss, but more confirm your direction of order. Then logically you should immediately re-enter and put your order on. Let's take a look at the follow-on. So here's one of the entry positions that we just did, which was a test of the previous trend extreme, a false breakout. So you got a long entry here. And it also had a counter trend, which was an uptrend breakout in this downtrend. We talked about the breakout of the 3-point trend line, the pullback of the demand mechanism, and then it must have been the breakout. But we found that this breakout was a success. Whether it was a success or a failure it was hard to say, because he made an interval here. So if we find out that it's true at 3 points it still fails in this pattern, either it doesn't bring a bull reversal, it still takes a subsequent decline, or something like that, it's also what we call a reversal pattern with a high probability, it brings a trading band, or it's a reversal pattern with a high probability of failure with only a few reversals. Right, it can really bring about a trend reversal. So if we look at this trade, this guy has actually made a very nice band profit by being long here. What about a breakout in this form of trading? So what we call a double bottom and double top, that's going to break out of this level, is going to fail miserably. And I'm not saying that this kind of breakthrough entry is worse than this kind of entry that's just at the time of testing, and neither entry is good nor bad depending on your trading habits, trading style. If you go, for example, in this breakout entry, you have a very narrow stop if you go with the breakout patterns that I taught you, and you don't have a very low win rate if you go with the breakout patterns that I taught you. Let's look at the next case, the two cases that I just talked about. One was a reversal, turned into a range, turned into a pullback, and one was a reversal pattern that just failed. And the reason why I'm talking about these two patterns first is because I want to discourage people from, the impulse to do reversals. A lot of people who learn inversion are really running for that very high reward, but he ignores that all inversion patterns have very low probability of success, which no one can change. The next few cases are some successful cases, but I talk about so many successful cases. Do not mistakenly think that the reversal is now really so good to do, just because I put the successful cases out to talk about it. If you look at this case, the previous downtrend or the downtrend, everybody defines a trend differently, but it's a very deep decline, it's a significant break of the downtrend line that you can see, and then a timely test of the original trend. We talked about this as 2 points, and by the time you get to this point, you can think of it as a potential reversal. Remember the word potential reversal, because you don't know if it's a real reversal until you have a contrarian break. And here does it give us that K-line pattern of entry, and there's a second upward break, which I won't draw here. If you zoom in a little bit and you can see it a little bit more clearly, if you don't know what the second break is, if you look at my previous video of the K-line pattern, and this test is basically parallel to the front band low, isn't that the standard pattern of what we call a double bottom? So when we go into this potential reversal area and we go long, there is also a contrarian breakout, which in this case is a bull breakout, and you go to trade the bull breakout, which is at this breakout point, is okay, because it has a shadow line, and I think it has a mini cycle of breakout, pullback, and breakout, that whether you do it at the dive point or you do it at the break point. This is a firm offer. It's just not looking at past cases so far. This form is pretty good. It doesn't matter whether it's a successful reversal or a failed reversal, it doesn't matter. If you think about it, if you've done more down here, you've learned the form you're going to do, you've been involved, you've made a large margin of profit while you were here. Even as I said, you should have closed half of your position, so it doesn't matter much to you where you find the rest of the trade. You don't lose anything to you, it's just a matter of making more than you make. So when you break out here and you look for a breakout pattern to enter, it should be a breakout pattern, only a pullback and breakout pattern, because it's a rush movement, and the rush movement that we talked about in my system that I never participate in, and if you're going to participate in that, it should be a breakout in a mini cycle, a pullback and breakout. So if you have a pattern where you have a very narrow stop loss when the price goes here, and I guess if you have a pattern where you have a profit/loss ratio of more than 1 to 1, then you have a mathematically successful trade. If you look at the case again, the first point is a breakout of the trend line, a big breakout, and the second is a test of the front high. Does that give us a sign of the way to short the K line here? No, because none of these K lines look very good for shorting. It doesn't give us a logic for shorting. So even though we were down this trade, we probably didn't make it, and then the contrarian break, did it give us an entry at the contrarian break point, and you're going to go to the mini cycle and look at it, did it give you some form of a break? So in this trade we found that although it was a successful major trend reversal, there was no pattern, right? You can't do it, you can't participate. This back test of the top was basically flat, so it was a double top and a head and shoulders top, and the only difference was whether it gave you a second entry. In this case, you might not be able to participate in a short position, but again, as I said, you should participate in a pullback more often. If we look at this first large movement against the trend in the small period, we should see this as a fairly standard wedge that you can participate in whether you are doing this channel line placing or this trend line breaking this multiple order, and how simple the logic of the multiple order is and how clear the entry is. It's a lot easier than if you did this reversal. And the other thing is that the profit target, we see that the price has basically come back after breaking through this pattern, but if you were to trade strictly on the reversal pattern, you would have closed all your positions. So let's see, the height of this pattern is probably close to the 50 level going down, and 48 points is close to the 50 level, and this should be one of the areas where you close out all your positions, and you shouldn't let your profits come back. Take a look at this case again. Similarly, the previous downtrend line was significantly broken through, but it did not significantly break through the moving average. It seems not to be a good shape, but the latter is the ultimate test for the park. Here after the entrance, to do more at the same time, the contrarian breakthrough also occurred. 3 conditions established that this deal should be easy to give a career goal. I look at this 30 points up, 30 points has been from the hit to nothing to say. I'm going to talk about these patterns, and I'm going to talk about some of the cases that I'm going to talk about that I'm going to show you that the success rate of this pattern is really not very high, and I'm not going to show you that this is a trend, but this is not a potential reversal pattern. We look at the rise of the depth of the correction and then a false break back to a previous rising point that now the rise is weak. Can you short? Can this is not a potential reversal. Of course, this is also a potential reversal pattern, that the trend of the subsequent trend I won't let go just to do a teaching logic. This pattern is pretty standard. If you look at this case again, the first couple of big breaks from the trend line, big breaks from the EMA. The second extreme retracement of the original trend, but this retracement did not give us a good short signal, so the K line should not participate in the third contrarian break. Also occurred this whole reversal pattern. I don't think we've got a good signal to enter in the small period. There might be a breakout pattern of a pullback and breakout pattern because I see there's a lead, and generally this kind of shadow line state in the small period should have this breakout or breakout. What am I trying to say with this case? If we draw the trend line this way, it's a double top reversal, but can it be a head and shoulders top because we see a higher point ahead of us and it must be okay. Although we can't plot this on this graph, the breakout of the trend line, because it's growing so fast, but such a rapid movement, it must have a very steep trend line in smaller periods, and this decline must have broken a very steep trend line, so there has been a breakout of the trend line, so this is a higher the test of the high. And then here is a second entry for this high, which is what we call a head and shoulder reversal pattern. So sometimes this double top, the head and shoulder top, it's probably the same thing, which is you can look at it any way you want to look at it. The major trend reversal pattern, which is often called a double top and bottom head and shoulder top and bottom pattern, is relatively common in the market. It doesn't just happen at the end of a trend reversal, but it happens often at the end of a pullback and the top and bottom of that range, and if it happens at the end of a pullback and the top and bottom of that range, then it's an entry pattern that I really like. Teaching cases are not easy to find because not only does the inversion pattern focus on this one, but we also have a lot of variations on this major trend reversal, and if I use the variation pattern as an example, it might be difficult for beginners to understand. We can combine today to share the content to feel you have encountered the double head top and head and shoulder top shape. Believe you will have a more comprehensive cognition. In the next video, we explain the other common market reversal shape. Good, thank you for watching. Please consider like, comment and subscribe, and don't forget to follow us so that you watch the follow-up update content.